If you are a green card holder, a lawful permanent resident, someone who was not born in the United States, or anyone currently preparing to apply for American citizenship, especially if you are an older immigrant or someone with any international financial connections, a brand new USCIS naturalization requirement is coming into effect in 2026 that could directly cause your citizenship application to be delayed indefinitely, trigger months or even years of additional scrutiny and requests for evidence, or result in permanent denial that destroys your dream of becoming an American citizen. And this is not just another routine bureaucratic update or minor procedural adjustment. This rule represents a fundamental transformation in how USCIS evaluates the good moral character requirement for citizenship applicants, introducing mandatory financial disclosure systems, automatic cross-referencing with IRS and FinCEN databases, and zero tolerance policies for incomplete or inconsistent reporting that will affect hundreds of thousands of naturalization applications every single year. Imagine that you have been a green card holder for 5, 10, or even 20 years, living honestly, working hard, paying your taxes, raising your family, and building your American life. You have waited patiently for your eligibility window to open, carefully prepared your Form N-400 citizenship application, gathered all your documents, and finally submitted everything with hope and excitement about becoming a United States citizen. Then weeks or months later, you receive a request for evidence from USCIS asking for extensive documentation about foreign bank accounts, overseas pensions, international property ownership, or money transfers that you never mentioned on your application because you did not realize they needed to be disclosed, or because you honestly believed those modest assets in your home country had nothing to do with your American citizenship application. Suddenly, your straightforward naturalization case has turned into a complicated investigation. You are scrambling to gather bank statements from foreign institutions, translate documents, explain transactions from years ago, and prove that your failure to disclose was innocent rather than deliberate. Your application sits in bureaucratic limbo for 6 months, 12 months, 18 months, or longer, while USCIS conducts additional background checks and reviews your financial history in excruciating detail. Meanwhile, your dreams of voting, traveling with an American passport, petitioning for family members, and enjoying the full rights and protections of citizenship are indefinitely postponed. And in the worst cases, after all that waiting and stress, you receive the devastating news that your application has been denied due to concerns about your truthfulness, completeness, or good moral character, which means you must wait years before you can reapply and may face permanent obstacles to ever becoming an American citizen. That nightmare scenario, which is becoming increasingly common in 2026, is exactly why understanding this new USCIS requirement matters so critically and urgently right now. But here is the essential good news that should give you hope and relief. Nothing in this video is designed to scare you away from pursuing your citizenship dream or to suggest that becoming an American citizen is now impossible. The entire purpose is to prepare you, protect your application, and ensure you take the right steps so that your naturalization process moves forward smoothly, quickly, and successfully without unnecessary delays, complications, or denials. If you understand what is changing, what USCIS now requires, and what specific actions you need to take before submitting your Form N-400, you can completely avoid these problems and dramatically increase your chances of approval. Over the next several minutes, I am going to explain this new requirement in the clearest, most straightforward language possible, so you know exactly what USCIS is implementing in 2026, why it specifically targets green card holders and foreign-born applicants, what the good moral character implications are, and what you absolutely must do immediately to protect your citizenship application and achieve your American dream. Hi, I'm Daniel Carson. I have spent years helping green card holders, immigrants, and foreign-born residents successfully navigate the incredibly complex United States citizenship and immigration services procedures, tax compliance requirements, and financial disclosure rules that can make or break naturalization applications. I know from working with thousands of people that applying for American citizenship represents one of the most important, meaningful, and emotional milestones in your entire life. For many immigrants, especially older adults who came to America decades ago and have waited patiently through years of residency requirements, becoming a United States citizen is the culmination of a lifetime dream, the ultimate validation of your decision to build your life in this country, and the gateway to full participation in American democracy and society. I also know how absolutely terrifying it can feel when you hear about new requirements, stricter enforcement, additional scrutiny, or stories of applications being denied or delayed for reasons that seem confusing, arbitrary, or impossible to predict. When you have invested years of your life maintaining your green card, following all the rules, building your career and family here, and dreaming of the day you can raise your hand and take the oath of citizenship, the thought that one small mistake or overlooked detail could destroy everything is genuinely frightening. That anxiety and fear are completely understandable and valid, especially for older immigrants who worry that time is running out, that language barriers make the process harder, or that they cannot afford expensive immigration attorneys to guide them through every step. That is exactly why I am here today. My goal is not to create panic or discourage you from pursuing citizenship. My goal is to give you accurate, honest, practical information in the simplest possible language without confusing legal jargon, without exaggerating or fear-mongering, and without leaving you more confused than when you started. I want to empower you with knowledge, give you a clear action plan, and help you understand exactly what you need to do to protect your citizenship application and move forward confidently toward achieving your American dream. Let's start by getting absolutely clear about what is actually changing in 2026 and separating verified facts from rumors, speculation, and misinformation that is circulating online and in immigrant communities, starting with the 2026 calendar year, which means affecting citizenship applications filed from January 2026 onward. United States Citizenship and Immigration Services is implementing what they officially call an enhanced financial transparency mandatory disclosure system for Form N-400 naturalization applications. This is a comprehensive new framework that fundamentally transforms how USCIS evaluates the financial disclosure, tax compliance, and good moral character components of citizenship applications, particularly for applicants who were not born in the United States and who have any financial connections, assets, accounts, or income sources outside of America. In very simple, straightforward terms, here is what this new system does. USCIS is adding extensive new mandatory questions directly to the Form N-400 citizenship application that specifically and explicitly require all applicants who were not born in the United States to provide detailed, comprehensive disclosure of every foreign bank account they own or control, every foreign pension or retirement benefit they receive, every piece of foreign real estate or property they own partially or fully, every foreign investment account or business interest they have, every substantial international money transfer they have made in the past 5 years, and every source of foreign income they have received during their period of permanent residency. These questions are not optional, they are not vague, and they cannot be left blank or answered with general statements like none or not applicable, unless that is genuinely and completely true. But the truly significant and potentially devastating part of this new system goes far beyond just adding more questions to a form. USCIS is implementing real-time, automatic, comprehensive data sharing and cross-referencing systems that electronically connect USCIS databases with Internal Revenue Service tax records, FinCEN foreign bank account reporting databases, Social Security Administration benefit records, State Department passport and travel records, and even financial information sharing systems that foreign banks and foreign governments report to United States authorities under international agreements. This means that every answer you provide on your Form N-400 about foreign accounts, foreign income, foreign assets, and foreign financial connections will be instantly and automatically compared by sophisticated computer algorithms with information you reported to the IRS on tax returns, information you filed on FBR foreign bank account reports, information you disclosed on Form 8938 foreign asset statements, information that foreign financial institutions have reported about you to U.S. authorities, and information from every other government database that contains financial data about you. If there is even the slightest mismatch, inconsistency, omission, or discrepancy between what you tell USCIS on your citizenship application and what appears in IRS, FinCEN, or other government databases, the automated system will immediately flag your application for additional scrutiny, generate requests for evidence demanding explanations and documentation, trigger enhanced background checks that can take many months, and potentially classify you as a good moral character risk who may have deliberately concealed information or been dishonest on your application. The disclosure thresholds are being dramatically lowered as well, which means that even small foreign bank accounts with just a few $1,000s, modest pensions of a few $100s per month, or inherited property with relatively low value must now be fully disclosed and documented, whereas in the past such small amounts might have been overlooked or considered too insignificant to mention. The stated official goal of this new system, according to USCIS and the Department of Homeland Security, is to close what they call the unintentional foreign financial disclosure gap in naturalization applications. This refers to the documented problem that large numbers of citizenship applicants, particularly older immigrants and people who maintain ties to their countries of origin, fail to fully disclose foreign assets, foreign income, and foreign financial connections, not because they are deliberately trying to hide wealth or evade taxes, but simply because they do not understand what needs to be disclosed. They do not realize that accounts in their home countries are relevant to their American citizenship application. They face language barriers that make complex forms difficult to understand, or they honestly believe that small amounts do not matter and do not need to be reported. But from the government's perspective, whether the failure to disclose is intentional fraud or honest, innocent mistake, it still represents incomplete information on an official immigration application, which raises questions about truthfulness, honesty, and good moral character that are fundamental requirements for naturalization. By implementing mandatory enhanced disclosure questions, dramatically lowering reporting thresholds, and creating automatic computer systems that cross-check every answer against multiple government databases, USCIS is essentially eliminating any possibility for applicants to claim they did not know what needed to be disclosed or that they made an innocent oversight. The system is designed to catch every discrepancy automatically and force applicants to explain, document, and prove that any inconsistencies were truly unintentional rather than deliberate attempts to conceal information. At this point, you might reasonably be asking why this new requirement specifically targets green card holders, immigrants, and people who were not born in the United States. Why are citizenship applicants being subjected to this level of financial scrutiny when native-born Americans face no such requirements? The answer involves both practical enforcement considerations and specific policy goals that USCIS and immigration enforcement agencies have identified. According to official government studies, internal USCIS reports, fraud investigation data, and joint research conducted by USCIS and the Internal Revenue Service, immigrants and foreign-born permanent residents represent what they call the highest risk category for incomplete foreign financial disclosure on citizenship applications. This is not because immigrants are dishonest or trying to hide things more than anyone else. but rather because immigrants, by definition, have lived in other countries, built financial lives in other countries before coming to America, and often maintain ongoing financial connections to their countries of origin for perfectly legitimate and understandable reasons. Many green card holders worked in their home countries for decades before immigrating to the United States and earned pensions, retirement benefits, or Social Security payments from those foreign employment years. These modest pension payments, which might be just $200, $300, or $500 per month, continue for life and provide important supplemental income, especially for older immigrants living on limited fixed incomes in expensive American cities. From the immigrant's perspective, this foreign pension has nothing whatsoever to do with their American citizenship application because they earned it through work in another country. It is already taxed in that other country in many cases, and it seems completely separate from their life in the United States. Similarly, many immigrants maintain bank accounts in their countries of origin for practical, family-oriented, and culturally important reasons. They keep accounts overseas to send money to aging parents or other relatives who still live in the home country and depend on financial support. They maintain emergency savings in case they need to return home temporarily for family medical situations or funerals. They keep accounts to handle financial matters related to inherited property or family businesses. They hold on to accounts because closing foreign accounts can be complicated, bureaucratic, and expensive, especially when dealing with banks in countries with different languages and banking systems. Young immigrants who came to America for education or work often have student accounts or savings accounts from their youth that still exist with small balances, even though they have not touched them in years. From the immigrant's viewpoint, these modest foreign accounts, small pensions, or pieces of family property have absolutely nothing to do with their qualification for United States citizenship. They are simply remnants of their previous life or practical tools for maintaining family connections. Many immigrants honestly believe that as long as they are paying their American taxes, following American laws, and living as good residents, their foreign financial matters are private and irrelevant to USCIS. But under increasingly strict immigration enforcement policies and enhanced good moral character scrutiny, even small undisclosed foreign accounts or modest overseas assets can now trigger application delays, fraud investigations, and citizenship denials. And failure to disclose these connections properly on Form N-400 is being treated as evidence of dishonesty or lack of good moral character, even when the omission was completely unintentional. USCIS believes, based on their research and enforcement experience, that the vast majority of citizenship applicants who fail to fully disclose foreign financial connections are not deliberately committing fraud or trying to hide wealth from the government. They are simply confused about what needs to be disclosed, overwhelmed by complicated forms they may not fully understand in English, unaware that small amounts matter, or reasonably but incorrectly assuming that their home country finances are separate from their American immigration case. The fundamental problem from the government's perspective is that intent does not matter when evaluating completeness and truthfulness on official immigration applications. Whether you left out information deliberately or accidentally, whether you were trying to hide something or simply did not understand the question, the result is the same: an incomplete application that raises red flags about your honesty and good moral character. So instead of continuing to rely on vague questions and hoping applicants will figure out what to disclose on their own, USCIS has decided to make disclosure completely unavoidable by asking specific, detailed, mandatory questions about every type of foreign financial connection, implementing automatic cross-checking that will catch any omissions, and treating incomplete disclosure as a serious good moral character concern that can result in application denial. By targeting these enhanced requirements specifically at foreign-born applicants and green card holders who are most likely to have foreign financial ties rather than applying them to all citizenship applications, including people born in U.S. territories. USCIS believes they can more efficiently identify problems while reducing burden on applicants who have no foreign connections. The impact and risk level of this new USCIS financial disclosure requirement varies significantly depending on your specific situation, how long you have been a green card holder, your age, your country of origin, and the nature of any foreign financial connections you maintain. Understanding where you fall in the risk spectrum can help you determine how much preparation, documentation, and potentially professional legal assistance you may need. If you are a typical green card holder who obtained your permanent residency through family sponsorship, employment, or other standard pathways and are now applying for citizenship after the required 5-year waiting period, you face moderate risk under the new system if you have any foreign financial connections at all, even if you have been living entirely in the United States, working American jobs, paying American taxes, and considering yourself fully integrated into American life. You may still have remnants of your previous financial life overseas that must now be disclosed. This could include bank accounts you opened before immigrating that you forgot to close, retirement accounts from jobs you held in your home country years ago, small inheritances of family property, or ongoing pension payments from previous employment. Under the new mandatory disclosure system, every single one of these connections must be listed, valued, documented, and explained on your Form N-400, and the information you provide must match exactly what appears in IRS and FinCEN databases, or you will face delays and additional scrutiny. If you obtained your green card through marriage to a United States citizen and are applying for naturalization after the reduced 3-year waiting period rather than the standard 5 years, you face the same foreign financial disclosure requirements as everyone else, but with an additional layer of scrutiny. USCIS already subjects marriage-based, green card, and citizenship applications to enhanced fraud screening because of the documented problem of fraudulent marriages entered into solely for immigration benefits. When you add incomplete or inconsistent foreign financial disclosure on top of an already scrutinized marriage-based application, you create compounding red flags that can trigger intensive investigations into whether your marriage is genuine, whether you have been honest throughout your immigration process, and whether you truly meet the good moral character requirement. Even innocent omissions can look suspicious in the context of a marriage-based case. If you're an older immigrant or senior who came to the United States later in life, perhaps in your 40s, 50s, or 60s, and maintained a full career and financial life in your home country before immigrating, you face the highest risk and most complex disclosure challenges under the new system. You are far more likely than younger immigrants to have accumulated foreign pensions from decades of work overseas, to own property, or have financial interests in your birth country, to maintain bank accounts for family and cultural reasons, and to receive ongoing income from foreign sources. You are also more likely to face language barriers that make understanding complex disclosure requirements difficult, to have less familiarity with American financial and tax systems, and to have accumulated years of tax returns and financial records that may contain inconsistencies or omissions that will now be scrutinized. For senior applicants, the combination of age, extensive foreign financial history, and potential language or comprehension challenges creates the perfect storm for disclosure problems that can derail citizenship applications. Extra preparation, professional assistance, and meticulous documentation are absolutely essential. If you are applying for citizenship through special pathways such as derivative citizenship through parents, military service naturalization, or other expedited programs, the foreign financial disclosure requirements still apply fully, although the overall scrutiny may be somewhat less intensive depending on your specific circumstances. However, any inconsistencies or omissions in financial disclosure can still trigger delays and additional investigation, even in otherwise straightforward cases. One of the most important and potentially devastating aspects of this new USCIS financial disclosure system is how it directly impacts the good moral character requirement, which is an absolute fundamental prerequisite for naturalization that cannot be waived or overlooked under any circumstances. Understanding this connection is essential because it explains why seemingly small disclosure omissions can have such serious consequences for your citizenship application. Under United States immigration law, specifically Section 316A of the Immigration and Nationality Act, every applicant for naturalization must establish that they have been and continue to be a person of good moral character during the statutory period, which is typically the 5 years immediately preceding the application for most applicants, or 3 years for those married to U.S. citizens. Good moral character is not precisely defined in the law, which gives USCIS significant discretion in evaluating it, but it generally means that you have been honest, law-abiding, truthful, and lived in a manner consistent with American values and legal standards. The law specifically lists certain actions and behaviors that automatically bar a finding of good moral character, including conviction of certain crimes, admission of committing crimes even without conviction, habitual drunkenness, illegal gambling, prostitution, and most relevant to our discussion today, giving false testimony for the purpose of obtaining immigration benefits. This last category is where incomplete or inconsistent financial disclosure becomes absolutely critical and potentially catastrophic for citizenship applicants. When you sign and submit Form N-400, you are certifying under penalty of perjury that all the information you provided is complete, true, and correct to the best of your knowledge. If USCIS discovers through their new automatic cross-checking systems that you failed to disclose foreign bank accounts, foreign pensions, foreign property, or other foreign financial connections that appear in IRS or FinCEN databases, they can potentially treat this as providing false or misleading information on an immigration application, which raises serious good moral character concerns. Even if you honestly forgot about a small account, even if you did not understand the question, even if you made an innocent mistake with no intention to deceive, USCIS may still question whether you were truthful and whether you possess the honesty and integrity required for citizenship. In practical terms, here is what happens when good moral character questions arise due to financial disclosure problems. Your citizenship application is not simply delayed while you provide additional information. Instead, it enters an entirely different track of intensive scrutiny. USCIS may schedule additional interviews specifically focused on your financial history. They may request extensive documentation going back many years, including bank statements, tax returns, property records, and explanatory letters. They may conduct enhanced background checks that examine your entire financial and tax history in minute detail. They may refer your case to immigration fraud investigators if they believe the omissions were deliberate. And ultimately, they may deny your application entirely based on failure to meet the good moral character requirement, which means you must wait years before you can reapply and may face permanent obstacles to citizenship. For green card holders, the consequences can extend beyond just the citizenship application. If USCIS concludes that you committed immigration fraud or willful misrepresentation on your N-400, they can potentially initiate removal proceedings that could result in loss of your green card and deportation, especially if they discover that you also provided false information on your original green card application or other previous immigration filings. What started as a simple citizenship application can cascade into a fight to maintain your permanent residency and stay in the country. Now that you understand what the new USCIS requirement involves, why it specifically targets foreign-born applicants, and how it connects to good moral character, let me give you a concrete, practical, step-by-step action plan that will protect your citizenship application and dramatically reduce your risk of delays, denials, or complications. I strongly recommend beginning this preparation process at least 6 months to 1 year before you plan to submit your Form N-400, not waiting until the last minute. Your first and most critical task is to create a detailed, written, comprehensive inventory of every single foreign financial connection, asset, account, income source, and property interest you have had at any point during your period of permanent residency, which means the past 5 years for most applicants or 3 years for those married to U.S. citizens. This inventory must include foreign bank accounts of any size, even if they currently have small balances or are inactive, foreign savings accounts, checking accounts or investment accounts, foreign retirement accounts or pensions from previous employment, foreign annuities or life insurance policies with cash value, foreign real estate or property you own entirely or partially, including inherited family property, foreign business interests or ownership shares in companies, foreign income from rental properties, investments, or freelance work, and significant international money transfers you have made or received. For each item in your inventory, document the following information: the complete name and address of the financial institution or organization, the specific country where it is located, the account number or policy number if you have access to it, the exact type of account or asset, the current approximate value in US dollars, the highest balance or value at any point during the relevant period, the dates when the account was opened and closed, if applicable, and the purpose and source of the funds. Many citizenship applicants get into devastating trouble simply because they never took time to organize this information systematically, forgot about accounts they rarely think about, or assumed small amounts were too insignificant to matter. Creating this comprehensive inventory now, before filing your N-400, can literally save your citizenship application. Your second essential step is to meticulously review every tax return you filed during your period of permanent residency and verify that you properly reported all foreign financial accounts, foreign income, and foreign assets using the correct forms and procedures. This means checking whether you filed FBAR reports for any years when your combined foreign account balances exceeded $10,000 at any point, whether you filed Form 8938 when required based on your foreign asset thresholds, whether you reported all foreign pension income, foreign rental income, foreign interest, and foreign dividends on your tax returns, and whether you correctly claimed any foreign tax credits or treaty benefits. If you discover that you failed to file required FBARs, failed to file Form 8938 when it was required, failed to report foreign income, or made any other tax reporting errors or omissions, you must correct these mistakes immediately before filing your citizenship application. The IRS offers streamlined filing procedures and voluntary disclosure programs that allow you to file missing forms, amend incorrect tax returns, and come into compliance with significantly reduced penalties if you can demonstrate that your failures were not willful. While correcting past tax problems may involve some penalties and professional fees, it is infinitely better to clean up your tax record voluntarily before USCIS discovers the problems through their automatic cross-checking system and treats them as evidence of dishonesty or bad moral character. Consult with a qualified tax professional or enrolled agent who has experience with international tax issues, FBAR requirements, and foreign asset reporting to review your situation and determine what corrections are needed. Do not attempt to handle complex tax compliance issues on your own if you are not completely confident in your understanding. Once you have created your foreign financial inventory and corrected any past tax reporting problems, your third step is to prepare comprehensive documentation that proves and explains every foreign financial connection you will disclose on your Form N-400. This means gathering foreign bank statements showing account balances and activity, pension or annuity statements showing payment amounts and sources, property tax records or ownership documents for foreign real estate, business registration documents, or partnership agreements for foreign business interests, wire transfer records or receipts for significant international money transfers, and any other financial documents that support your disclosures. For each foreign asset or account, prepare a brief written explanation describing the purpose of the account, the source of the funds, how you use it, and why you maintain it. For example, this savings account in Mexico contains approximately $8,000 that I keep for emergencies when visiting my elderly mother twice per year. The funds came from savings I accumulated while working in Mexico before immigrating to the United States in 2015. These explanations demonstrate transparency, show that you have nothing to hide, and make it easier for USCIS adjudicators to understand your situation without suspicion or confusion. Before you submit your completed Form N-400, your fourth critical step is to personally verify that every answer you provided about foreign accounts, foreign income, foreign assets, and foreign financial connections matches exactly with what appears in IRS tax returns, FBR filings, Form 8938 statements, and any other government records. Compare your N-400 foreign account disclosures line by line against your most recent FBR filing to ensure consistency. Compare your N-400 foreign income statements against what you reported on Schedule B or other tax forms. Make sure that account numbers, financial institution names, countries, and dollar values are identical across all forms and applications. If you discover any discrepancies or inconsistencies, determine why they exist and correct them before filing. It is far better to delay your application by a few weeks to ensure perfect consistency than to file with mismatches that will trigger automatic flags and investigation. Remember that USCIS computers will be comparing your answers against government databases automatically and instantly, so any inconsistency will be caught. Your fifth and final step is to create and maintain meticulously organized files containing copies of your completed Form N-400, all supporting documents you plan to submit, all foreign financial records and explanations, all tax returns and foreign reporting forms from the relevant period, all correspondence with USCIS, and any other immigration or financial documents related to your case. Keep both physical copies and secure electronic backup copies of everything. For applicants with complex foreign financial situations, older immigrants with extensive foreign financial histories, anyone who has had past tax compliance problems, or anyone who is not completely confident in their ability to navigate this process independently, seriously consider hiring a qualified immigration attorney who specializes in naturalization cases and understands the foreign financial disclosure requirements. Yes, attorneys are expensive, but the cost of professional representation is far less than the cost of a denied application, years of delays, or potential loss of your green card. For many applicants, especially seniors with complicated situations, professional legal guidance is not a luxury, but an absolute necessity. To help you understand why this matters so critically and why taking action now is essential, let me share a realistic, detailed example that illustrates how easily devastating problems can happen to completely innocent, honest people who simply did not understand the disclosure requirements. Imagine a 65-year-old grandfather who is a green card holder, came to the United States from the Philippines 20 years ago through family sponsorship, worked hard his entire adult life, paid taxes diligently, raised his children and grandchildren here, and has been patiently waiting for the right time to apply for citizenship. He maintains a small savings account in the Philippines with approximately $15,000 in it that he uses to support his elderly sister who still lives there and to cover expenses during his annual visits. He also receives a modest pension of about $300 per month from his former government job in the Philippines before he immigrated. Because these amounts seem small to him, because they are completely separate from his American financial life, and because he has limited English language skills and finds complicated forms confusing, he never reported the Philippine bank account on his FBAR filings, never filed Form 8938 even though his account exceeded the threshold, and never disclose the pension income on his U.S. tax returns. His tax preparer, who is not familiar with international reporting requirements, simply prepared returns based on the W-2 forms from his American job and never asked about foreign accounts or foreign income. In early 2026, feeling ready to finally pursue his citizenship dream, he downloads Form N-400, fills it out to the best of his ability with help from his adult daughter, who translates some of the questions and answers no to questions about foreign bank accounts and foreign income because he does not fully understand what the questions are asking and assumes they only apply to very wealthy people with large overseas investments. He submits his application, pays the filing fee, and waits excitedly for his interview appointment. 4 months later, instead of an interview notice, he receives a thick envelope from USCIS containing a request for evidence. The letter states that USCIS automated systems discovered discrepancies between his N-400 application and information in government databases. Specifically, the Philippine bank where he has his account participates in an international financial information sharing agreement and has reported the account to U.S. authorities. Additionally, the Philippine government has reported his pension payments to the IRS under a tax treaty information exchange. USCIS is demanding that he provide detailed explanations for why he failed to disclose this account and income on his citizenship application, complete copies of all bank statements for the past 5 years, proof that he has filed all required FBARs and Forms 8938, amended tax returns if necessary, and a detailed written statement explaining whether his omissions were deliberate or unintentional. Panicked and confused, he hires an immigration attorney for $5,000 who immediately brings in a tax attorney for another $8,000 to handle the IRS compliance issues. Over the next year, he must file 5 years of delinquent FBARs with penalties, file amended tax returns, reporting the pension income, pay back taxes and interest, and prepare extensive documentation and explanatory letters for USCIS. His citizenship application sits in limbo for 18 months while USCIS conducts enhanced background checks and fraud investigation reviews. He endures 2 separate USCIS interviews, one focused solely on his financial disclosure problems, where officers aggressively question whether he was trying to hide assets or income and whether he possesses the truthfulness required for citizenship. Meanwhile, his adult children who were planning to sponsor his brother to immigrate are told their family petition is being held in administrative processing pending resolution of their father's citizenship case. His dream of voting in the next election evaporates. His hope of traveling with an American passport fades, and he lives in constant fear that his citizenship will be denied and possibly even his green card revoked. Eventually, after spending over $15,000 in legal and accounting fees, paying several $1,000s in tax penalties, enduring enormous stress and anxiety, and waiting nearly 2 years, his citizenship application is finally approved after USCIS concludes that his failures were unintentional rather than fraudulent. But those 2 years of his life, the financial costs, the emotional toll, and the damage to his family's immigration plans could have been completely avoided if he had simply understood the disclosure requirements and properly reported his modest Philippine account and pension from the very beginning. Let me address the most common questions and concerns that green card holders and citizenship applicants have about this new USCIS financial disclosure requirement, because clearing up confusion now can prevent devastating problems later. Answer: under the new 2026 system, all foreign financial connections must be disclosed regardless of size. There is no minimum threshold below which you can safely omit information. Even a bank account with just a few $100s, even a pension of $50 per month, even partial ownership of a small piece of family property must be fully reported. The disclosure requirements are comprehensive and complete, not limited to large amounts. Answer: yes, absolutely. The new automatic cross-checking system will compare your current N-400 disclosures against your entire tax and financial history, going back through your period of permanent residency. If you failed to report foreign accounts or income on past tax returns or FBAR filings, those historical omissions can and will be discovered and used to evaluate your truthfulness and good moral character. This is why correcting past tax compliance problems before filing for citizenship is so critical. Answer: the worst possible outcomes include permanent denial of your citizenship application based on lack of good moral character, being required to wait years before you can reapply, potential civil or criminal tax penalties for FBAR and income reporting violations, possible referral to immigration fraud investigators, potential initiation of removal proceedings that could result in loss of your green card and deportation if USCIS determines you committed willful misrepresentation and permanent damage to future immigration petitions you might file for family members. These consequences are not theoretical scare tactics. They are real outcomes that happen to real people who fail to properly disclose foreign financial connections. Answer: no, this strategy will not work and could actually make your situation worse. USCIS asks about foreign accounts and assets you held during your period of permanent residency, not just what you currently own at the moment of application. Closing accounts or selling property right before filing can look like deliberate concealment and raises additional red flags. You must disclose foreign connections you had during the relevant period, regardless of current status. As we reach the end of this comprehensive guide, I want to leave you with perspective, encouragement, and a clear call to action. Applying for United States citizenship is one of the most important and meaningful decisions you will ever make. For immigrants who have built lives here, raised families here, worked and contributed here, becoming an American citizen represents the ultimate validation of your journey, the culmination of years of patience and perseverance, and the gateway to full participation in American democracy and society. The new USCIS financial disclosure requirements for 2026, while strict and demanding, are not designed to prevent deserving immigrants from becoming citizens or to unfairly punish honest people. They are designed to ensure complete transparency, accurate reporting, and truthfulness, which are fundamental values in the naturalization process. The government has a legitimate interest in knowing whether citizenship applicants have been honest on their applications and compliant with tax laws, and for immigrants who maintain connections to other countries, demonstrating that transparency requires full disclosure of foreign financial matters. The good news, the hopeful news, the empowering news is that if you understand what is required, if you take the preparation steps we have discussed today, if you organize your documentation thoroughly, if you correct any past tax compliance problems, and if you answer every question on your Form N-400 completely and accurately, you can successfully navigate this process and achieve your citizenship dream. The vast majority of green card holders who prepare properly, disclose fully, and demonstrate good moral character will be approved without major problems. Do not let fear, confusion, or misinformation prevent you from pursuing citizenship. Instead, let knowledge and preparation empower you to move forward confidently. Start today by creating your foreign financial inventory, reviewing your tax compliance, and organizing your documentation. If your situation is complex, invest in qualified professional assistance rather than risking mistakes that could cost you everything. Take control of your application, be proactive rather than reactive, and protect the American dream you have worked so hard to build. Your dream of becoming a United States citizen is achievable, valuable, and within reach. With proper preparation, complete honesty, and thorough documentation, you can successfully navigate the 2026 USCIS requirements and take that final step toward full American citizenship. If this video helped you understand what you need to know and do to protect your citizenship application, please like it, share it with other green card holders and immigrants who need this critical information, and subscribe to stay updated on immigration changes and requirements. Leave a comment sharing your citizenship journey, your concerns, or your questions so others can learn from your experience. Stay prepared, stay hopeful, and achieve your dream. I'm Daniel Carson, and I'm here to help you navigate your path to American citizenship successfully. Thank you for watching, and I'll see you in the next video.